Today, Bitcoin's price takes a breather after that huge Wednesday rally. Coinbase recovers from an outage that showed users empty account balances. And Phil Harvey, the CEO of Saber56, breaks down what Bitcoin's rally means for miners ahead of the upcoming halving event. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Prices of major cryptocurrencies pretty flat as of noon Eastern, with Bitcoin trading down 0.5%, but still keeping above the $62,000 mark. Ether, on the other hand, slightly in the green, rising less than 0.5% to $3,442. Solana, meanwhile, soaring today by more than 12% to $130 amid this week's broader crypto rally. Okay, let's talk about the top stories. Coinbase is recovering from an outage that came right in the midst of that huge crypto rally yesterday. The trading platform's app showed $0 balances for many users trying to access their accounts around midday yesterday. Now, Coinbase told CNBC at the time of the outage that customers' assets were safe. Later in the day, the platform bounced back and Coinbase posted on X that it was seeing improvements in customer trading. Still, it warned that some people might see login and transaction errors because of increased traffic. Shares of the company's stock dipped about 1.5% as of noon, but fell as much as 3.5% yesterday as the outage was taking place. Next, Gemini has agreed to repay at least $1.1 billion to customers of the crypto exchange's Earn Investment program as part of a settlement with New York regulators. That deal, reached yesterday, would also see the bankrupt platform pay a $37 million fine to the New York Department of Financial Services, in part for its dealings with crypto lender Genesis. In a statement, Superintendent Adrian Harris said that Gemini failed to conduct due diligence on an unregulated third party, later accused of massive fraud, harming Earn customers who were suddenly unable to access their assets after Genesis Global Capital experienced a financial meltdown. Gemini also agreed to pay $40 million to Earn customers trying to recover funds in the Genesis bankruptcy. Gemini took to X yesterday to let Earn users know that if the deal is approved by the bankruptcy court, they could get back 100% of their digital assets, as well as any and all appreciation of assets since lending into the program. The Post noted that the required bankruptcy court process could take as long as 2 months to complete. Last, a new report reveals that the majority of illegal crypto activity is tied to sanctioned groups or terrorist organizations. Chainalysis released its 2024 crypto crime report today, which found that more than $24 billion of illicit cryptocurrency was transferred in 2023. Now, it's important to note that while that figure was lower than the previous year's number, a higher proportion of the funds were attributed to sanctioned entities like those tied to North Korean hacking groups and U.S.-designated terrorist groups like Hezbollah. Those tied to sanctioned entities and jurisdictions accounted for more than 61% of total illicit transaction volume last year. Chainalysis points out that as adoption of crypto by illicit actors continues to grow, so have the tracing and enforcement methods of agencies, officials, and analysis firms. You can check out the full story over at CNBC.com. All right, back to Bitcoin for our main story. As the price of the cryptocurrency soared above $60,000 this week, I spoke with Phil Harvey, the CEO of Saber56, a digital asset mining consultancy, about what the rally means for miners and what will change after the halving in April. So yesterday was a big day for crypto, with Bitcoin hitting $64,000, closing in on the previous all-time high of nearly $69,000. And this morning, Bitcoin was trading above $63,000. Now, investors are expecting Bitcoin to set a new record this year after the launch of ETFs made the asset class more accessible to institutional investors, and with the network's halving event set for April. Now, historical trends have shown price increases around past halvings. So how much of the recent crypto rally would you say is attributable to the upcoming halving? And what do you expect will happen with price in the weeks leading up to and following that event?
The big question, right? What happens with price? So it's anyone's guess. I mean, historically, the price will rise. How much so? It's to be determined. I would like to think that Bitcoin price should go 150K over the next 4 years. And that would be a conservative suggestion. Realistically, I think it's going to settle around 80, 90 as the norm. And that's obviously linked to the miners' revenue and the margins that miners have to make based on the power price.
So what exactly does this rally mean for miners? I read that the number of Bitcoin held in wallets tied to miners has dropped to the lowest since mid-2021, and that blockchain data shows that crypto miners are still selling their Bitcoin as the upcoming halving approaches. So is this Bitcoin rally contributing to that trend?
A lot of it's to do with the ETF. I think it would be foolish to suggest otherwise. Miners need to sell Bitcoin, right? Unfortunately, people don't accept Bitcoin as a payment for the utilities for power. So this is something that we will always see. The larger miners that have fiat to pay for the operations can obviously subsidize that, but Bitcoin still needs to be liquidated in the market periodically. So I believe solely that the ETF is a big push in the prices. Now we've seen that mature in the market, and wider user groups now moving forward with their ETF investments.
So focusing on the halving, I came across Cantor Fitzgerald research out last month, which warned that if Bitcoin prices do not rally significantly, many Bitcoin miners will not be able to mine profitably. The report analyzed 13 publicly listed mining companies and forecasted that 11 of them will fail post-halving based on the Bitcoin price at the time of $40,000. So what do you think it will take for miners to survive, and could this recent rally help them stay afloat?
Well, let's unpack that a little bit. So miners, public miners, larger miners are now going through a change in their stock. So if you had the older generation of equipment, lower efficiency of around 30 joules a terahash, your margins today are still 30%, up to 50%. So they're still making good money. Once halving takes place, they will be underwater or making a small margin of 5%. As we then move forward with newer versions, newer generations of the machines, those margins start to increase. Ultimately, the price needs to rise. Global hash power will fall after the halving. As we saw in previous years, the previous halving cycle, we lost around 35% of the global hash rate, and then that picked up over time. So, revenue is a constant ebb and flow. If we were to say that halving occurs right now, then yes, a lot of people will be underwater, but that is the beauty of industry, right? We need to be efficient in order to survive, and Bitcoin mining is no different to any other industry.
Now, we spoke with CleanSpark's CEO last month, and he forecasted that 15 to 30% of miners will have to shut down post-halving. Your company, Saber56, consults miners on the development and operation of facilities. So do you think that's a realistic range? And do you expect to see consolidation among miners following the upcoming halving?
Absolutely. I'm coining this next iteration, the industrialization of mining, and something that we've foreseen for at least 12 to 18 months. The real question that we have to ask is, how can miners grow? The issue becomes the access to power. So now we're seeing in the space a lot of mergers and acquisitions taking place because the power just isn't there for people to grow into. So those underlying assets, the power purchase agreements, PPAs, are becoming extremely lucrative. So yes, there will be miners that don't have the capital in order to reinvest, and therefore, provided they have a lucrative underlying power asset, will become an M&A target. On the flip side of that, or another view, hosted miners, so guys that don't have access directly to the power source, that use third-party services to have their machines hosted, they will be the first that will really suffer because their rates are higher, because there's additional margin baked in for the service, and their machines are typically older because they're at the back of the queue for the new machines. 15 or so percent, I would tend to agree with that. stated earlier, we lost 35% of the global hash rate previously. So it's an accurate figure in my assumption.
Now, we're learning that Riot and CleanSpark are expanding their Bitcoin mining operations ahead of the halving, with Riot acquiring more than 31,000 mining machines and CleanSpark completing the acquisition of 3 new facilities. What do you make of these developments? I take it the firms are trying to enhance efficiency and prepare for the upcoming halving events where the amount of Bitcoins rewarded to miners will get cut in half, putting financial pressure on operations.
So Riot took a very positive view, risky in some regards, putting all their proverbial eggs in one basket, that basket being Texas, and expanding within the state. So they have the ability to expand, and they have space for those machines to go into. Other miners, Marathon, for example, they were a hosted only, so an asset-light model. They made a transaction last year. They completed that around 178 million, I think, for 300-ish megawatts. So, these miners are taking notice now. Same with CleanSpark. So as you look at the top 10 miners, it's really the top 5, top 6 that have the cash flow in order to deploy to purchase machines and the infrastructure. And again, unless you're up for M&A, that's really the only way to grow, considering the restriction on the access to power. It's just not there anymore. We see this daily.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.